Imagine living in a world where the tax collector shows up at your door and instead of filing forms online, you hand over sacks of grain, chickens, or even days of your labor. This was reality for millions of people in medieval Europe, where taxation was a complex, often brutal system that kept kingdoms running and peasants struggling. Medieval taxes were nothing like the standardized systems we know today. They were a patchwork of obligations that varied wildly depending on where you lived, who owned your land, and what social class you belonged to. The methods used to collect these taxes reveal a fascinating and sometimes disturbing picture of how power, money, and survival intersected in the Middle Ages. So how exactly did medieval rulers extract wealth from their subjects? What did people actually pay? And what happened if they refused? Let's dive into the world of medieval taxation and discover how this essential but deeply unpopular system actually worked. Before we explore how taxes were collected, we need to understand why medieval rulers needed them so desperately. Running a kingdom was expensive. Kings had to maintain armies to defend against invasions and wage wars of conquest. They needed to build and repair castles, roads, and bridges. Royal courts required funding for everything from elaborate feasts to diplomatic missions. But here's the catch. Medieval economies ran primarily on agriculture, not cash. Most people were peasants who grew crops and raised livestock. They rarely handled actual money. This created a fundamental challenge for tax collection. How do you tax a population that doesn't use currency? The solution was a system that accepted payment in many forms. Taxes could be paid in grain, livestock, labor, military service, or goods produced by craftsmen. Only in towns and cities where merchants and artisans conducted business with coins did cash taxation become more common. The right to collect taxes was jealously guarded. Kings claimed this authority as a divine right, but in practice they shared it with a complex hierarchy of nobles, church officials, and local lords. Each level of this hierarchy took their cut, which meant peasants often paid far more in total than what actually reached the royal treasury. Medieval taxation fell into several broad categories, each with its own collection methods and challenges. Understanding these categories helps us see how comprehensive and inescapable the tax burden could be. First were direct taxes on land and property. These were the backbone of medieval revenue. Every piece of agricultural land owed taxes to someone, whether a local lord, a bishop, or ultimately the king. The most common form was a percentage of the harvest. Peasants typically owed between 1/10 and 1/3 of everything they grew. Then came taxes on people themselves, often called poll taxes or head taxes. These required every adult, or sometimes every household, to pay a fixed amount regardless of their wealth. These were deeply unpopular because they hit the poor hardest. The most famous example is the English poll tax of 1381, which sparked the Peasants' Revolt. Indirect taxes were collected on trade and commerce. These included tolls for using roads and bridges, fees for selling goods at markets, and customs duties on imported items. Merchants traveling through medieval Europe faced a bewildering array of these charges. A trader moving goods from one end of France to the other might pay tolls at dozens of points along the way.
Feudal obligations represented another major category. These weren't always called taxes, but they functioned the same way. Peasants owed labor service to their lords, working the lord's fields for a certain number of days each year. They paid fees to use the lord's mill for grinding grain or the lord's oven for baking bread. They even paid taxes when their daughters married or when they inherited property. The church collected its own taxes, most notably the tithe. This was theoretically 1/10 of all agricultural produce owed to support the local parish. The tithe was collected separately from secular taxes, meaning peasants paid both their lord and their church. The actual collection of medieval taxes required an army of officials, agents, and enforcers. At the top were royal administrators appointed by the king. In England, these were sheriffs who oversaw entire counties. In France, bailiffs and seneschals performed similar roles. These officials were responsible for ensuring that taxes flowed upward to the royal treasury. But these high-ranking officials rarely collected taxes personally. That dirty work fell to local agents who dealt directly with taxpayers. In rural areas, the lord's steward or bailiff managed collection from peasants. These men were often minor nobles or wealthy peasants themselves, chosen for their literacy and ruthlessness. Tax collectors were universally hated. They had the power to assess property, demand payment, and punish those who refused. Many were corrupt, pocketing a portion of what they collected or accepting bribes to reduce assessments for wealthy taxpayers while squeezing the poor harder. In towns and cities, tax collection looked different. Guilds of merchants and craftsmen often collected taxes from their own members and paid lump sums to the city government. This gave urban residents some collective bargaining power that rural peasants lacked. The church had its own collection system for tithes. Parish priests kept records of who owed what, but actual collection might involve visiting farms during harvest time. Some regions used tithe barns, where peasants brought their grain and church officials measured and recorded the amounts. Violence was always an option for tax collectors. Those who refused to pay might have their property seized, their livestock taken, or in extreme cases, face imprisonment. Tax collection could turn into armed confrontation when entire villages resisted. The practical mechanics of tax collection varied by region and type of tax, but certain patterns were common throughout medieval Europe. Let's walk through how different taxes were actually gathered. For agricultural taxes, timing was crucial. Collection happened after harvest, when peasants actually had crops to give. In late summer and early autumn, tax collectors descended on villages. They went farm by farm, inspecting fields and demanding their share. Peasants brought sacks of grain, wheels of cheese, or drove livestock to collection points. Record-keeping was surprisingly sophisticated, at least at higher levels. Royal treasuries maintained rolls listing who owed what. These documents, written on parchment and stored in chests, formed an early database of taxable wealth. The most famous example is the Domesday Book, commissioned by William the Conqueror in 1086. This massive survey recorded land holdings and values across England, creating a permanent record for tax purposes. For taxes requiring cash payment, collectors set up stations in market towns. Taxpayers came on designated days to pay their obligations. Coins were counted, weighed, and recorded. Receipts might be issued using tally sticks, wooden rods with notches cut to represent amounts paid. The stick was split lengthwise, with the taxpayer keeping one half and the collector keeping the other as proof of payment. Labor obligations were collected differently. The lord's bailiff maintained a schedule of when each peasant owed work service. During planting or harvest season, peasants reported to the lord's fields for their required days of labor. Failure to appear meant fines or worse. Market tolls and customs duties were collected at the point of transaction. Guards at city gates stopped merchants and inspected their goods. Fees were calculated based on the type and quantity of merchandise. Bridge tolls worked similarly, with collectors stationed at the crossing demanding payment from everyone who passed. The church tithe collection often happened in kind. After harvest, priests or their agents visited farms to claim 1/10 of the crops. Some parishes used a more organized system where peasants brought their tithe to the church's tithe barn. Church officials measured grain using standard containers and kept records of who paid. Not surprisingly, medieval people tried every possible method to avoid paying taxes. Tax evasion was as old as taxation itself, and the cat-and-mouse game between collectors and taxpayers shaped medieval society in profound ways. Peasants hid portions of their harvest, understated the size of their fields, or claimed crop failures that hadn't actually occurred. Merchants smuggled goods past toll stations or bribed customs officials to look the other way. Even nobles tried to avoid taxes they owed to the king, claiming exemptions or simply refusing to pay when they felt powerful enough to resist. Tax assessments were a major point of conflict. Officials determined how much land someone farmed or how much their property was worth. These assessments were often arbitrary and corrupt. Wealthy taxpayers could influence assessors with bribes or threats, while poor peasants had no such leverage. When evasion failed and the burden became unbearable, resistance turned violent. Medieval history is full of tax rebellions. The Peasants' Revolt of 1381 in England exploded after the government imposed a harsh poll tax. Rebels killed tax collectors, burned records, and briefly occupied London before being crushed. Similar revolts occurred across Europe. The Jacquerie Uprising in France in 1358 was partly triggered by excessive taxation to pay for the Hundred Years' War. The German Peasants' War of 1524 to 1525 had tax grievances among its many causes. These rebellions were brutally suppressed, but they demonstrated the limits of how much rulers could squeeze their subjects. Some regions negotiated tax agreements. Cities sometimes purchased charters that fixed their tax obligations or gave them the right to collect their own taxes. This created a more predictable system and reduced the chance of rebellion, though it often meant the burden shifted even more heavily onto rural peasants. The medieval tax system, for all its chaos and brutality, established principles that survive in modern taxation. The idea that governments have the right to compel payment from citizens, the need for record-keeping and assessment, the use of professional collectors, all of these have medieval roots.
But medieval taxation also shows us the dangers of systems without accountability or fairness. When tax collection becomes too disconnected from the people being taxed, when the burden falls disproportionately on those least able to pay, and when collectors operate without oversight, the result is resentment, evasion, and sometimes revolution. The next time you file your taxes online or pay a toll on a highway, remember that you're participating in a tradition stretching back centuries. Medieval peasants watching tax collectors cart away part of their harvest would recognize the basic transaction, even if the methods have changed dramatically. Medieval tax collection was messy, personal, often violent, and always contentious. It reveals how kingdoms maintained power, how ordinary people struggled to survive, and how the fundamental tension between rulers and ruled played out in the most practical terms possible. Understanding this system gives us insight into medieval life that goes far beyond kings and vassals, into the daily reality of how most people actually lived. If you found this deep dive into medieval economics fascinating, consider leaving a like and subscribing for more content exploring the real history behind the Middle Ages. What medieval topic should we cover next? Drop your suggestions in the comments below. Thanks for watching, and I'll see you in the next video.